Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Simon Caron of the Uneducated Economist. Simon, thank you for coming on the show.
Yeah, you bet, man. Thanks for having me.
Yes. Okay, let's start out a little macro, kind of basic. What is your base case for precious metals, being that we're at the Silver Symposium?
Well, I tell you, I am a big fan of precious metals, especially silver. Throughout my life, I have accumulated silver and thought of it always as an insurance policy. I personally don't really look at the market in a sense that I'm going to get rich off of silver.
Yeah.
The chances of it are happening are really good, considering the manipulation within the paper industries. With it, you got, what was it? The Geoffrey Griffin that was asking the question, how many paper ounces of silver? 250 or something like that for every 1 ounce.
Yeah.
It's mind-blowing to think about, if all those paper contracts turned into physical purchases, I mean, yeah, who knows where silver could go to. So the potential is there for an extreme rise. I personally, with my experience with silver, have used it as an insurance policy. I know in my life when I had a downtime where I was broke, couldn't find, the ability to get to work, my car was broken down, I had a box of silver. And I called a friend up one time, and sure enough, he was like, yeah, I'll trade you a car for silver. And I had right again. So since that day, I've always looked at silver as an insurance policy more than an investment.
Yeah.
But the potential for a dramatic rise in silver really does seem to be there.
Yeah. Okay, now you follow because of your line of work, you follow the housing market quite a bit. You're in contact with contractors all the time. So I think you are probably plugged in and have kind of a boots on the ground view of the housing market more than a lot of us and the viewers do. Can you kind of give us your overview of what you see going on in the housing market and construction right now?
Sure. Just to let your viewers know, I am from a really small town in the corner of Oregon, it's Astoria. It's a very famous town, home of the Goonies and stuff like that. A lot of movies and stuff were made there. But the overall construction within the county itself is pretty small.
Okay.
We don't have a lot of area to have like a major, development put in or something like that. So really, I'm talking with contractors who are building individual homes for either a customer or a spec home, and it's really more on a smaller scale. But my location and the ability to be within the industry itself, I feel that it's very sensitive to what's going on out there. So when things happen within my within my site, within the store that I work at and the sales that we do, I think of it more as like a preliminary to what we're going to see happening out there within the rest of the markets.
Yeah.
Some of the bigger markets out there, when you have a 500 house development, I mean that's way bigger than anything we're dealing with.
Yeah.
However, if we start seeing issues with the builders, then I would imagine that those big 500 developments are going to be next, right? So when I see builders coming to me saying, hey, we are backing out, like we are not doing spec homes, we're not really interested in signing new contracts for anybody, we're just basically backing away right now because the interest rates are just scaring us off. That tells me that there is going to be a shortage of new houses coming onto the market, at least from the new construction side of things. So that's something that I'm looking forward to.
Yeah.
I mean, not necessarily looking forward to, but looking forward to seeing that actually comes to fruition.
Yeah.
You can really see it in the housing starts have slowed down. Housing completions is another one to kind of keep an eye on, see how many new completed homes actually make it onto the market right now. But all that seems to be really, suppressed. Like we're not selling a lot of lumber in the sense that we did at one time when there was like a booming housing economy.
Yeah.
That is not even remotely close to what we have experienced in the past. So right now, I don't see a lot of movement happening within the lumber industry, which tells me that there's not a lot happening within the new construction, which then in turn means that there's not going to be a lot of new inventory coming onto the market anytime soon.
Okay, interesting. Okay, all right, I like that. And I get it, just probably because we're so curious about it, what do you see happening with interest rates right now in the Fed?
So, I've been following the Fed and what they've been planning on doing with these Fed funds rates for a while. Before even like the inflation scenario or COVID or anything else happened, they had a situation in which the interest rates were too low. They were too low to the lower bound of zero. And the reason why they were too low, or the reason that was a problem, is because it doesn't give a whole lot of room for the Federal Reserve to move.
Yeah.
If they have interest rates at 2%, typically they would want to drop 5% in order to stimulate the economy to, during a recession. But when you're at 2%, dropping it to zero doesn't really stimulate the economy like it once was, and they knew this. They were talking about it being a problem, that we are sitting at the lower bound, and that interest rates really do need to rise.
Yeah.
Now, this was said in their speeches and their documents. It didn't come right out in a statement like they gave to the public or something saying, hey, we're going to raise interest rates and try to get them elevated. It was more in their concerns within their speeches that they had said. So in my opinion, I saw when the interest rates fell, that they were going to let inflation run extra hot, extra long for an extended period of time to make those asset prices be well elevated so that when it came time to raise interest rates, they could raise them well beyond what they normally would have in order to get their ammo back.
Okay.
And that's the situation we're in right now. If they can keep the inflation scenario going, really, if you think about it, inflation is more about expectations. If the inflation expectation is running hot, then generally you're probably going to have inflation doing the same thing. So as long as you can keep the inflation expectation running hot, you can keep those interest rates elevated, gaining more of your ammo back. So that's really what I see happening right now, is the push to keep that inflation expectation running extra hot, extra long for an extended period of time to make up for the fact that they had interest rates so low for so long. Another statement that came from the Federal Reserve is that they're going for a 2% average inflation rate. It used to be a 2% target. Now, everybody still thinks about it being a 2% target, but it's a 2% average rate over time, but they don't tell us exactly what that means.
Yeah.
Like, is it 10 years? Is it 5 years? Did it start at the COVID? Did it start prior to that? Nobody really knows what this average inflation rate is, so it really becomes arbitrary to the Fed, right? When they say, hey, we've achieved our goal. So I look at it again like that. It was just like, okay, so if we had inflation run extra hot, extra long for an extended period of time, well, then when inflation does come down, they're going to have to keep interest rates elevated so that inflation stays low for an extended period of time to make up for when it was hot, so they can maintain their average 2% over time. Did that make sense?
Higher for longer is what I heard. Higher for longer.
Higher for longer.
Okay.
Higher for longer, yeah.
All right. I like that. All right. Okay, so wrapping up, what is your favorite commodity right now, Simon?
As far as like purchasing, or just like one that I see that is going to do?
What commodity do you see doing best over the next 18 to 24 months?
You know, I don't follow the commodities markets as closely enough to give an opinion on which one of those is going to do better.
Okay.
I really just kind of follow lumber and what's happening within the lumber industry. Now, I think that lumber will have a dramatic rise to it if we have the home builder sentiment go positive. Okay. Right. So once the home builders say, hey man, I'm liking this environment, I want to start building again, there's so many who have kind of held back. Well, this is their income. Right, you know, they're itching to build. They want to build. They want to make money, right? And so they're all sitting there waiting, hoping for that moment. So once that sentiment turns positive, if the Fed gives any kind of idea that they're going to lower interest rates into the future or something like that, that ought to spark that interest. Like, hey, let's get in there and start building again. Well, because we're sitting in a situation in which the demand is so low, the inventory level of the lumber is also low. Okay. Mill curtailments have been running for the last year, so they have a very lean inventory right now throughout the entire industry because the home builder sentiment is so low. But again, if that pops just a little bit, takes, because right now it's negative in all aspects. If it goes positive, then what you're going to find is a big demand for lumber, and I don't believe that there's a lot of inventory out there to supply a decent demand. Right? So it depends on how much that demand comes in. If that be the case, then, well, you have the potential to see lumber rise again in a dramatic fashion. So, we're sitting at about 500 per thousand. That's about the same price that we were at in 2018. Okay. So we're like, all the inflation has come out of lumber. It's not there right now. Yeah. But the condition is very tight. And I just feel like, if you have any kind of pop to home builder sentiment, when they get encouraged, it's on.
Then lumber is going to take off. Yeah. What did it get up to per, you said it was 500 per thousand board foot?
Correct.
What was it at the height of COVID when we shut down the truckers from Canada? How high did
I believe the intertrade dating got up to 1,700 per thousand. Wow. But I think it closed somewhere around 1,620, 1,650, somewhere in there.
So a 3x from where we're at now.
Yeah.
Do you see numbers like that possibly once the sentiment kicks in? Or
no.
That was an anomaly.
It was sort of like it was a bit of an anomaly. There was a lot of issues that were taking place prior to COVID. Okay. Right? So British Columbia, this is going to get kind of long, but I'm going to try and do it short. British Columbia is a major producer of lumber for the United States. Yeah. Right?
It's like 80 or 90% or something, right?
Well,
Or I'm sorry, Canada.
Canada, the softwood imports from Canada represents 20% of our lumber supply. So
Okay.
20% of our lumber comes from Canada. Of that 20%, something like 80-90% of it comes from British Columbia. So
Okay.
it's like whatever's happening in British Columbia is going to be very sensitive for the rest of the market.
Dictates lumber.
Right, exactly. And so British Columbia is a high output, high cost producer. So they pump out an insane amount of lumber out of this little area, and it's the most expensive place to mill.
Huh.
Right? So now what ended up happening is that there was a bug infestation that had just like ripped the forest apart up there. Wildfires, mismanagement, whatever. There was a situation in which that they needed to cut a lot of these logs down or else they were going to lose them, right? So they were in what they called salvage mode. Now salvage mode is when they take the stumpage fees and they drop them really low. This is the fee that the loggers have to pay the government. Right?
Okay.
Well, it ends up being an input cost going into the mill, and when they were in salvage mode, that input cost dropped to really low so they can make use of all these logs that had died.
Okay.
Right? I mean, if they just let them sit there, they're going to rot,
They're gonna
you know,
rot and
wildfire,
go, yeah.
you know, damage, whatever. So they cut these things up, milled them up, and sent them down to the United States. Now, this was in like 2018 when they said, okay, salvage mode has come to an end. However, at that time, lumber was priced about $650 per thousand.
Yeah.
Right? And so what ended up happening is that they raised the stumpage fees to match what the price was at $650. So now there's this huge stumpage fee on all these trees, and the price of lumber falls. All right, so now it goes from $650 down to like $300 per thousand. You have this added stumpage fees going into the mills up there in British Columbia, and they're like, prices are at $300, and we got these added stumpage fees. We're
Yeah.
done.
Yeah,
right?
what are we doing with
We're
these?
done, right?
Yeah.
So they started shutting down, like completely shutting down mills. Done, not
Wow.
operating anymore, not to come back ever again. Right? There was a place up there in British Columbia called 100 Mile. And the stories coming out of 100 Mile were so sad. I mean, here's families who have been in this business for generations, and they have nothing left. The only thing they had up there were trees and mills and logging, and that's it.
Yeah,
Right? And once
yeah.
that was over, it was over. So really, this was the major impact going into COVID, is that all of a sudden these mills were done.
Yeah.
Inventory fell to an incredibly low. Then here we got COVID kicking. This is throughout 2019. I mean, you
Yeah.
go back onto my channel, I'm doing a video once a week about another mill shutting down,
Yeah,
like for
yeah.
the entire year. Even at the end of that year, I'm talking about OSB production, which is the plywood that's used in new construction, pulling hundreds of billions of board feet off the market. And again, this is all in 2019, prior to COVID. So COVID hits, lockdowns, even more mill curtailments taking place, stimulus checks come out, and then boom, everybody runs down there to the lumber yard and buys up all the lumber, and inventory is gone.
Gone.
That's it. It's
Okay.
all gone.
So
Right?
it wasn't just COVID. This was a
This was
situation
a build
that
up,
set
build up. And that's the reason why I was so adamant about this inflation scenario that you're seeing in lumber is not due to the money printer. This
Yeah.
is due to an inventory depletion that has taken place.
Interesting.
There might be some money printer going on. We will
Okay.
see it going on and everything else.
Yeah.
But the major run from 400 per thousand up to 1,700 per thousand,
Yeah.
that was due to inventory depletion and an overwhelming consumer demand
Okay,
coming out of
okay.
that. And
I
now-
felt it because I was building an ADU at the time, and I went down to my local Home Depot, and it was $14 for a crooked 2x4
Right.
instead of $2.50 for a perfectly dry straight one. I'm
Yeah.
like, wait, what happened?
Yeah, and us and it was what was really amazing about this is that I have guys who are sitting there next to me, and they're calling manipulation and all kinds of stuff, and I'm like, what are you talking about?
Yeah.
Guys, we experienced this the whole time. I mean, look at my videos.
Yeah.
What are you doing? So. It was very difficult for people, even within the industry itself, to see it. But it was because I was so adamant about making contacts with loggers and mills and just all kinds of people within the industry to get a good insight of what was happening. I was like, no, this is not what everybody thinks it was. And
Yeah.
so that was the reason why I was able to call it lumber as accurately as it was. It made me
Okay.
famous, actually.
Yeah. Awesome. Simon, thank you very much.
You're welcome.
Okay, and thank you for tuning in. If you want to check out Simon, his link is in the show notes below. Hit the like and subscribe, and we will talk to you next time.